Happy Friday, team. It's 8:02 a.m. Chicago time on the 19th of November, 2021. Thanks for joining me today on episode number 2120. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's the layout. Very, very interesting action overnight. It's funny, we talked about this in the Convergent Trading Head Trader channel, and we actually looked into holding a 4701.50 long, and he has targeting 15 after taking out the 1175 high, and it just would not go yesterday. Huge battle between 4700 and 4705, and then overnight the S&P's push to 4723.50, only to have the European, so that was done parabolically, only to have the Europeans come in with a shutdown, a complete lockdown in Austria to last at least 10 days, with Germany saying that it's likely to follow up with the same kind of mandate, and that shot the market down. So the European markets are getting hit. As you see, the Euro Stoxx 50 down 1%. So we're seeing this after actually rallying to new all-time highs, and now we're trading actually below. The S&P is down 22 basis points, 10 points, opening basically in around yesterday's open. Yesterday's open was 46.97 and a quarter. We're trading around 46.91 currently. The Nasdaq holding its ground here coming into today. As I look at the overall market heat map, I see that FB is up 1.27%, Netflix up 168 basis points, Adobe's up 78 basis points, INTU, Intuit, is up 13.21%, NVIDIA up 1.84%. Remember, NVIDIA is up about 40% over the last month, and a huge component in the electronic technology sector, and a big component of the S&P. Financials still in the red. Berkshire Hathaway down again, JP Morgan down, Bank of America down 214 basis points, and so on and so forth. Morgan Stanley, Schwab, Wells Fargo, all down. So we had a big swing up and a big swing down, and that's what we're coming into today, with the Nasdaq holding steady pre-market. I'm going to look at the Nasdaq's underlying. It looks like, yeah, the Nasdaq's being carried by those stocks mentioned, with Apple just slightly down. Apple down 61 basis points only so far this morning. So very large divergence between the S&P 500, the big dog, the Nasdaq 100, the Russell 2000, and the Dow 30. So there's just a lot going on that's kind of pointing things in different directions as money flows into specific sectors that may or may not be heavily represented in those indices. Crude oil is on its way. I've been talking about crude oil now for the last 2 weeks. When it was up at 82 or so, I talked about it likely pushing to 72 over the next couple weeks. But with the premium adjusted chart, the target here for crude is 74.85 or 74.95, something like that. Crude off 326 basis points. Kind of sad because I just bought a full tank of gas last night. But crude is coming off as expected. Gold continuing to hold in this 1865 area. Same with silver, holding around $25. Bitcoin, was looking at Bitcoin and ETH this morning, and here's a chart that I'm using to track, and you can see that Bitcoin is actually free to fall down into 53, this low volume node here, as it's pushing through the high volume node. It looks like it's likely to fall into 53,000. It's definitely a lot weaker than Ethereum has been from its all-time highs. ETH is at support at 4,000 here. We'll see if it actually holds. So those products Those products have been interesting to watch. Again, this sell-off is driven by the very strong wave of infections of COVID-19 in Austria and potentially Germany. So Germany being the economic superpower of the EU. Today, key earnings, pre-market Foot Locker. That's about it. It's a retailer. And nothing post-market. The overall market stance is mildly off, but again, that's a drop in the S&P of about 50 points from the high. So it looks mildly off against the prior settlement, but from the high, it is definitely a risk off since this morning. The calendar is very light. Fed's Waller, Fed's Clarida, and ECB's Lagarde today. As you can see, let's look at the S&P. The S&P has traded 280,000 contracts so far, with inventory basically being flat. Basically being flat with the range of 39.25 points. The point of control again in the 46.90 area, very close to what it was yesterday. So we're versus yesterday's pre-open, we're back in balance at these prices. Multi-distribution profile, the point of control is shifted from way up around 47.18 to where it is now at 46.89.75 or 46.90. So that's where we stand this morning. It is very likely that the trade would be quite active this morning, given the stance of the market and what has happened overnight. There's going to be some revaluation or some movement inside of these indices today. So it'll be a good day to kind of sit tight and monitor the market, in my opinion. Let's take a look at what we got yesterday. I'm going to spend very little time on this. Yesterday, there's just a lot to say. I feel out of breath this morning, but yesterday we tested up by a couple ticks, and then we just immediately dropped lower and took out the prior day's low. So yesterday we ended the one-time framing higher on the daily. We ended that yesterday, and then we ended up pushing to 46.68, if you recall, 46.67 from Tuesday. I believe it's Tuesday. We had a 46.67 double TPO low, or a double bottom low, a weak low down there. And the expectation was, even if we had a pullback, we are likely to pull back into the mid and VWAP and fall through and at least poke through that price for a little trickle down below. Did not do that. We ended up pushing pretty strong, actually, right through the day references. This move here, this large move here looked like a higher time frame stepped in and bought the market, and it bought it through the 4,700. Nice little opportunity here. Could not catch. There were two opportunities right there and right there. The break above the full session mid and the break above the prior day's high after consolidation. Very well defined risk reward area right here. Very well defined risk reward area down there and right there. Those are, I mean, it's unbelievable. Those are 4 to 5 hour trades that were presented by the market. It was looking for 47.07 test yesterday, the prior week's high. It just couldn't do it. Pulled back. It went to 450, pulled back, consolidated for a while, and then on the close we went to 05. I took a trade. I narrated a trade at 0150 long, looking for 07 and a break of 11, because what we did yesterday was a very clear. What we had yesterday was a very clear spike, V bottom low, and very, very clear excess low. If you see how the volume traded as it moved down, the volume really dried up at the low. This is a relatively strong low and excess low. I'll show you that on, what is this Dow chart? Oh, this is from yesterday's webinar. So if you look at yesterday, look at that wick. That is an excess low wick and a reversal. This is very bullish, basically a hammer, but in range as opposed to at the bottom of the range. And this looked very bullish and a very high probability of the take of 47.11.75, but it just frustratingly would not do it on the close yesterday. It ended up doing it right after the close. So yesterday, Delta was pretty much at the zero line pretty much the whole day, and it was a tough trade into the close. Here's what happened after the close. So we bob around on the close, we open, push higher immediately, put up a triangle, and we break the triangle during the Asian session to the upside. Japan announced its largest ever stimulus package, something like $500 billion, which is very large for Japan, about twice as much as economists expected, provided a pretty strong rally in stimulus in the overnight session for the Asian market. And then the market held steady here in another bear or bull flag formation. And then the Europeans came in. We had a nice little continuation. So this is the impulse consolidation continuation pattern. Very important pattern for me personally in terms of trading. The Europeans came in, and there it is. It's just a spinning top and immediately a precipitous fall, very quick fall. This is a 30-minute bar chart. Within an hour, we covered 50 points in the S&P and have consolidated since. So although we have a multi-distribution profile, really it's a double distribution profile with the low volume node right at settlement, right at 47.0150. Very important structure here. The important thing to note today is, does it make it through this region? The 4700, 4701, 50, 4702, and 4704.05, yesterday's high. As long as it stays below there, it is likely to have a lid on it. If we push through, then we're looking for a quick rally back into 47.15 is the next area I have up. And then from there, 47.20.75 are the projected targets on the S&P. That's a lot to digest, right? So a lot went on. The point of control remaining at the low end of the range and is likely to be a magnet this morning as we open. So we'll see how that goes, but that's what we have. Next thing I wanted to show you is the, where is it? The overview chart in Edge Pro X. Look at what's happening here. We have the S&P having started the month, moved away from its VWAP, creating separation, coming back, and then tapping. Yesterday, we had a nice little tap at the 68 of the monthly VWAP, and we took off, and we're coming back. We're holding well above it. Look at the Dow. The Dow has had separation earlier in the month, pretty good separation earlier in the month, has gotten below its VWAP, and now it's tapping the VWAP from below. Big divergence there between the Dow and the S&P. The NASDAQ remaining quite strong, strongest of the bunch, whereas the Russell was actually the strongest of the bunch earlier this month. About a week into the month, you could see the large separation in the Russell, and now money is flowing out of the Russell. It's actually creating separation to the downside. A huge divergence between indices that are generally 98, 99% correlated on an end-of-day basis are now really moving away. So these spreads are expanding between the indices. Of course, the indices, this is a 500 large market cap weighted index. This is a 30 price weighted index, which seems arcane to me, but it is what it is. The Dow is very popular, but this is a price weighted index, the Dow. Here's a 100 heavy tech market cap weighted index, and here's a 2000 small cap market cap weighted index, all kind of moving in weird directions. So So this is where the interesting thing is. So because the market is disjointed, we know money's moving from one section to another or one instrument to another, and that is likely to cause revaluation. And so this is likely to create opportunity, intraday opportunity for us as money flows from one thing to the other. This is how we make money. Okay, so that's where we stand this morning. I'm not going to go through the rest of it. The notes and the bonds taking a big spike on that drop. So again, risk aversion this morning, risk off sentiment as money moves into safety, in response to not only Austria, but also the fact that Japan just is planning to inject a whole bunch of money into the market. So you can see the guys over in the gold and in silver have seen this coming from a mile away and have responded earlier in the month and have been holding steady since then. So in any case, I believe this leads to some pretty good opportunities coming into potentially today and into next week. It is that Friday of the month where we talk about where everybody is located. So please take a moment to just punch in your city, state. We like to do this just for fun. Hopefully you'll look around and find someone near you. If you have a Twitter handle or an Instagram, and you want to put it in there so folks can contact you to team up, to trade together, or be an accountability partner or something, you can provide that as well. So if you see someone nearby or anybody you'd like to connect with, and they provide the Twitter handle, feel free to follow them and then send them a message, and hopefully you guys can connect and be better traders together. This is the whole purpose of this. This is brought to you by EdgeClear. Let's move on to the plan for today. It's actually sometimes surprising how many people are trading near you that you're not aware of. So we are pushing higher here in the S&Ps. I need to see what's going on to the left, and I don't need this much room. We're pushing higher here in the S&Ps. We're looking at a market that is, let me look at the inventories, 23% short. Looking for an open that reverts towards the overnight point of control, but may not see it. Remember, this is a news-based event, okay? This is a news-based event, so it's really important to recognize that there's an SOC in play in here. I don't know where the SOC is, probably somewhere around 47.15 or something. But this is likely to revert back, but I'm looking for this to ultimately push higher through the 4,700, tackle the 47.05 high from yesterday, and then start to move towards the 15 finally. The 15, consolidate, and then hold steady up here. I doubt that it would take back the entire sell-off, and the reason I'm doubting it, and this is just non-statistically based, the reason I'm doubting it is because the news is real, the lockdown is happening, and the infections are a little bit out of control in some European countries right now. So to me, that's likely to continue to be factored in. We may not see that 20, the next target up, which is the 20 quarter and the 2350. So this is maybe one of those days where we don't actually get to see the overnight stat get fulfilled, because the overnight range is outstanding. It's unusual. It's above 2 standard deviations right now. So the secondary is an open auction that tests higher, moves to 05, moves to 07, takes out the prior week's high, and then later in the session, and this may be a news flow driven trade, later in the session we're likely to push through and get back down into 4690, and then 4685. The 85 area here has been important for a couple days now. 85, we've talked about this one before. 85 gives us the overnight stat, and then we're back to the 80 low. Lots going on the 80. Notice the one vol sigma up is 21. The vol sigma down, is 4681. giving us 40 points of range that we can play in up or down. So these coincide. The top one coincides with the measured move high of 20. The bottom one coincides with the low volume node, the prior settle, and the one vol sigma down to the downside. So I'm looking for these to be the key barriers up here: 20, 20, and the 80. I would not expect the market to move much past those. If it does, I'm not expecting it to close below the 80 or above the 20 today. We'll see how it goes. All right. Don't forget to put in where you are and your Twitter, Instagram, or whatever handle, and let's see if we can connect some people. Good luck today, and I'll catch you tomorrow. Catch you not tomorrow. I won't be here tomorrow. I'll catch you Monday. Take care, everybody.